There's so many different types of funding out there, and there's so many different lenders out there that lend in this alternative space that it is completely overwhelming and confusing. And if I go to any of their websites, they do not say, I lend money based on your revenue. If you have this, you get approved. They just want you to apply. Like all they're saying is apply, 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 apply. And so I think the general entrepreneur population just really does not understand, nor should they.
Hello, and welcome to another episode of the How to Scale a Business podcast. My name is Hector Esteban, and I am your host for today. Our special guest is Mr. Ty Crandall, and he is the founder of Credit Suite, and we're going to talk about getting businesses funding today. So, Ty, welcome to the show.
Thanks, man. Thanks for having me. Excited to be here.
I think this is an important conversation because I think a lot of business owners, myself included, they think that, well, I remember the old adage, it takes money to make money, right? And I've gone back and forth about whether or not people think that that's the truth. But I don't think that a lot of people are aware of what you do or the fact that there's even a whole world of funding and opportunities for people who are looking to get started. So I'd love for you to share with the listeners sort of why this became your path and then, some of the key stops that were along the way.
Yeah, sure. So the first company I ever owned was a mortgage company, and I built it up, scaled it to seven figures. And then the mortgage crisis occurred. So, I learned very young into my entrepreneur career that things can just come out of left field, like COVID, stuff that you just have no control over and completely knock you off your feet. And that's what I did. And I made a lot of decisions that other business owners make similarly, where I provided a personal guarantee. And so that decision and that shift, what I did in mortgages went away overnight. So the business crashed. And as that did, I personally guaranteed everything and it took me down with it. Foreclosures, repossessions, trash credit, everything that goes with that, unfortunately, and business debtors coming completely clean out my personal bank accounts. I saw that firsthand. And so as I tried to rebuild the new company, I had no credit, I had no revenue. I was trying to build in a high risk industry. And so I really just started to discover the challenges of, trying to get the money I needed to be able to start a business under those conditions. And then along the way, I got into the business of helping people fix consumer credit. And then, people started to expose me to business credit or ask me about it. And at that time, there really wasn't any information about it anywhere you could find online at all. It just didn't exist. And so I started to look into it and I realized what business credit could do, and it could protect my personal assets and wouldn't have to provide personal guarantees. I realized it would have been the game changer if I would have known about it when I started my mortgage company. So I just really then became a complete advocate and started helping business owners to be able to go out and to be able to actually be able to understand business credit, build business credit. And then from there brings me to where I am today. I guess it's been a long journey of, 12 years now at this point.
Yeah. One of my mentors, he used to say, and he came from the real estate sort of space, investing. He guys said, banks don't ever want to give you money until you don't need it. And I was like, well, that's not exactly as helpful as I would have hoped. I think so many people are ignorant, not in a negative way, but like you said, there's just not that information isn't out there. What do you think are the biggest things that people aren't aware of or that should be aware of that aren't even crossing their desks or aren't even, coming across as possibilities?
Well, I think there's this old adage that's out there that, that you can't get money when you need it. And there's some truth to that. The problem that I think a lot of entrepreneurs face is that they wait until they're in a really bad situation to try to go out and apply for money. And that's not the best time at all to be able to go try to go get money. When you are in trouble, and I don't know if you've ever been there before, but this is something I've learned on my personal side. If a friend comes to me and asks me for money, I will never see that money again and the friendship will be over. And I found that because that is their last call. If they are that desperate and to that point, usually they are at the lowest point and they usually typically from what I've seen in experience, they just don't recover. And that's kind of the way that lenders look at this. Somebody comes in, the revenues are declining, they're struggling to pay their bills. Then they go looking for money. That's the worst time because lenders don't want to lend to businesses that are struggling. They want to lend to businesses that are successful, that are growing, that the revenue is stable, that the revenue is increasing. So nobody ever should go out and try to apply for money when they're in trouble, when things are bad. And this is why I suggest that you should get all the revolving credit you can get. If you can get business credit cards without personal guarantees, without credit inquiries on the consumer side, if you can get credit lines, get these. One of my friends the other day, we helped her get $300,000 credit lines. She said, Ty, what do I do? I said, take them all. I said, you should always take every kind of revolving credit you should get because you're not paying on that unless you actually use it or need it. And then you've got it there if, whatever comes up. So I think that everybody should be applying for credit early in the process and financing early in the process of building a business. Any revolving credit you can get, you should get. You should definitely be trying to get money before you actually need it and not when you're desperate for money. And I think if you're doing those things, then it positions you well to have the best chance of not just getting approved, but like getting money at the best terms.
As you're saying that, it makes me think that there's really a mindset shift or maybe a philosophy, a way of thinking that needs to be changed. I sort of came of age listening to a lot of Dave Ramsey and thinking that, debt is the devil. And of course, people are have their reasons and it's worked for some ways. But I think that prevented me from what you're just saying and being open to the possibility of taking funding or getting, credit when I didn't necessarily need it or wasn't bleeding for it.
Yeah. Look, a lot of people I think are that way. But here's the interesting thing, and I often do this on live streams where, I'll pull business credit reports from whatever company somebody wants me to, HP, Dell, Apple, I mean, you name it. And we'll just look at them. And I'll do this in webinars. We'll look at 10, 20, 30, 40, 50 of the biggest privately and publicly owned companies. And what you'll find is that 100% of them, all of them, have tens or hundreds of trade lines of their business. They're all borrowing money. They all are. They all got to be that big because they are borrowing money. There's not one company that exists today, from Amazon to Facebook to Nvidia to any of them. None of them got to where they are without borrowing money, right? SpaceX, all of them. So, like, I'm not saying you have to be that big or want to be that big, but everybody that's successful, all of them, 100% of them that are successful, they all follow the exact same playbook. They're masterful at using OPM. So if we look at Walmart, 80% of what Walmart puts on their shelves, they use business credit to buy. So if you look at their model, what they do is they get credit, they use credit to buy all the stuff they put on the shelves, like 8 out of 10 items, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You walk through Walmart, 8 out of 10, they bought on credit. They get your money, they use your money to pay off the credit. That's their model. Now, what that allows them to do is it allows them to save cash, and then they use the cash to open up new locations, right? It's why they have 10,000 locations around the world. If we look at Apple, Dave Ramsey, steward of the world, was, hey, Apple, I know what to do. You have 130 billion in cash on hand and 100 billion in debt, right? Any Dave Ramsey steward would say, Apple, take your 130 and pay off the 100. But Apple wouldn't be one of the most valuable companies in the world if they did that. What they're doing is strategically using other people's money to pay for everything that it will pay for. Then what they're doing is saving their cash, and they're using their cash for R&D and, again, an expansion into retail. So it doesn't matter what company we talk about. They're all exactly the same way. They are growing and expanding using cash to do it, and they're running their operation using credit and financing. So Dave Stewart, I'm a fan of Dave. But Dave's audience is typically for people that struggle and have credit card debt and kind of struggle financially to be able to develop budgets and those kind of things. You just can't have that mindset as an entrepreneur. Entrepreneur is all about masterful use of OPM to strategically bring money into the business to actually grow it.
I think it's fantastic. It leads me to my next question, which is there mistakes that people are making, or are there things that people are, or ways that people are shooting themselves in the foot, so to say, that is preventing them from being able to utilize this sort of opportunity or access these things to the fullest?
I think that one of the most shocking things that I've seen in this journey over the last decades is that more than half of applications, like 60% plus of applications, are denied because the business owner doesn't meet basic, what's called credibility, fundability. We call it funding ready criteria. So that means that business owners, when I stand in front of a large room, I say, give me an idea. Why do you think loans applications get denied? The number one reason. People say, it's my income, it's my credit score, it's my time in business, it's my industry. It's none of that. The reality is the lender never even gets that far 6 out of 10 times. 6 out of 10 times, you don't pass the basic sniff test. Like, you don't have a proper entity set up. You don't have a business phone number, a business address set up. You don't have a professional website or a professional email address set up, or a business license or a business bank account set up. Or most importantly, number one reason they get denied is the information is just not congruent. Like, I go search your business online and Yelp says this, and Google business page says this, and social media says this, even if it's a little bit off. And then the lender, their computers can't even validate the business is real because the stuff is like convoluted. It's all a little bit different. So that's one of the biggest mistakes I see business owners make, is like, you have to understand that legitimacy and credibility is the number one factor. If you just get past that one hurdle, then you're past the one thing that gets 60% of loans denied. Then from there, it's kind of taking a second step of understanding your strength from a lender's perspective. They look at cash flow, credit, or collateral. Lenders look at either a combination of those three or one of the three. So know what your strength is and know what you're applying for. Like if my credit's 850, then I don't want to go to a and have zero revenue. I don't want to go to on deck and apply because they'll deny me because like their lending is based on revenue. It doesn't matter if my credit score is 850. Or if I want to go get credit card stacking, I don't want to go credit card stacking and make $10 million of revenue a month and have 550 credit scores. They can't approve me. The approval's based on credit. So like when you understand like the type, your strength, whether it's cash flow, credit, or collateral, then you can start to find the kind of funding and the lenders that lend based on that strength. Then it opens up the door for you to get money when oftentimes you might think you don't qualify. And then if you don't have one of those, business credit's a good alternative. So those are probably two of the biggest lessons I've learned. Set up the business where it's credible and then know what your strengths are and go get funding based on that strength, because other times you're applying for funding that's looking at another strength you don't have. And that's what's actually causing you to get to that. If you just do those two things, 9 out of 10 times you apply to get money, you're going to get approved.
Is the real challenge when businesses are getting, going down this path of trying to pursue, different types of funding, is it that the steps are hard or difficult, or criteria is sort of, specific in that regard? Or at least to me, and push back and tell me if I'm wrong, but it seems like it's, again, this ignorance thing where they're just unsure of what's possible, where to go, how to make themselves appeal to a particular entity or institution. Where do you think like the bottleneck or the real challenge lies once they've, decided that they're going to move in this direction?
I think you get a couple things. First of all, I think it's just that as entrepreneurs, we just want to move. We want to go. We don't like details in a lot of cases. And so setting up the business where it's credible or you're funding ready right from the beginning, even if I tell 100 entrepreneurs that, two will do it. 98 will not, because it's just details they don't want to focus on. So they just keep getting denied for the same basic things that if they just fixed once, they would never have that problem again. I think the second thing and the biggest problem is that before Dodd-Frank and before this whole mortgage thing occurred back in 2008, like we had SBA. Like that was it. You get an SBA loan, your credit's good, your revenue is good, your cash flow is good, years in business, you get an SBA loan. And that was 90% of like all funding that happened. Then like we saw this mortgage crisis occur, Dodd-Frank came in and all of a sudden things started to flip. And now we're at over 90% of funding comes from alternative lenders, which sounds really good. Like now we can get approved if we have credit problems and if our revenues, if we're a startup, all these times we never could get approved before. But the problem is that there's so many different types of funding out there, and there's so many different lenders out there that lend in this alternative space that it is completely overwhelming and confusing. And if I go to any of their websites, they do not say, I lend money based on your revenue. If you have this, you get approved. They just want you to apply. Like all they're saying is apply, 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 apply. And so I think the general entrepreneur population just really does not understand, nor should they, understand the multitude of complexities of different kind of lending and credit products that are out there and what actually works for them. And that's really where I've dedicated my career, is like bridging that gap. And AI's helped us tremendously to be able to say, like, here's where you are and here's what you can get overall across the board. Then if I go to a lender, they offer like two products, and both of them are based on my revenue. So again, if I don't have revenue, I can't get approved and I think I'm done, but then I have other things that I could have got approved with if I went to the right source. I just think it's overwhelm. I think it's complete confusion. Entrepreneurs shouldn't have to try to figure this out. And by trying to figure it out, they're just impossible. There's no way they're going to bump into the right kind of funding product, especially the right lender that can lend based on their unique situation.
Yeah, I would imagine that a lot of it was against this ignorance and information problem. And then I'd imagine that over the last several years, it's swung the other way and sort of become, like you said, overwhelming and becoming so much information to weed through that people are getting lost in it. Ty, when we get back from break, I'm curious about, whether there are steps. One of the two things is either, how do we do it or what's possible? And so I think that we're going to get into a little bit more of creating a concrete image of what people can do with their businesses and the possibilities. We're going to get into that right after the quick break. Hey, y'all, today's episode is brought to you by Amplify Media, and we are a podcast and content production company. Well, we actually like to think of ourselves as like the media entity of your company, because chances are if you're listening to this, you probably have a product, a passion, a mission, a message, some sort of service you're trying to get out to the world, but you might not have the time, the team, or the tech skills to do it. If that's the case, we can help. Go to amplifymedia.com. That's AMPLAFY media.com. You can also check the show notes for the link. And with that, let's get back to Ty. So Ty, I love this because again, this ignorance thing, I'm exhibit A. I'm so ignorant, tried to do everything on my own, use my own, all the mistakes you talked about, I've made them. And I think one of the coolest things is hearing what's possible or hearing how people have really utilized this. So are there any favorite either case studies or success stories, clients that you think of people who really sort of took this thing and ran with it?
I've got a lot of them. And one of my favorites is one of our clients, Christine. And this is like old school. I mean, I'm going to age myself here, but when I was first live streamed, it was on Periscope. A lot of people don't know this. Like Periscope was like Twitter's live stream. Like that
I
was when
remember it.
live stream first existed. It was like very first. So I was like Periscoping and figuring this whole thing out. And then I met this lady, Christine, and she came in and an over the road trucking company, her and her husband Brian had, and they tried to build business credit. They'd failed. They worked with a few companies and they'd failed and just had a lot of the same struggles, credit issues and didn't have the means to get financing. And we're kind of ready to give up. And then she started following my live streams and we started talking through it. I used chalkboards and whiteboards. And then she became a client. And then she started to understand the right way to do it and started getting a lot of the accounts that she needed right away. The fuel cards, which in trucking is a big deal. Like it's $600 to $1,000 to be able to fill up your truck. So she started to get gas cards everywhere, 10K, 30, 50K. And then that started to offset expenses and then continued to build her business credit. And then what she realized was that what happened in the world was that the contracts she was bidding on, they were looking at business credit to determine the approval of those contracts. And she didn't know that. So as she started to build business credit, all of a sudden, then she started to get approved for all these more contracts and all this more work. And she secured over $1 million in business credit last time I'd talked to her. And she was buying a 50 truck operation from a 1 truck operation. And they were growing simultaneously a couple other businesses. So that meant a lot as well to be able to see her success. And another one, interesting enough, New Year's Eve, Julius. So this guy was homeless. I mean, legitimately homeless and struggling, and then kind of found my trainings and started going through. And I don't even know how he was able to pull it off at the time. And then started to actually, figure out he could get some money to invest in the business and started to actually grow his business. And now, guy's super successful. I mean, he's so appreciative. And so he was actually at my house. He lives in Atlanta and he flew down for my New Year's Eve party and I get to see him once in a while and, driving a Mercedes and has a big house and a very successful business and starting another successful business. So it's pretty cool to watch people go from like homeless or, absolute failure to success. And I could sit here literally for hours and just tell you story after story after story of somebody that's similar, because what it comes down to, I found, is that look, entrepreneurs, we're powerful beings if we have the means to be able to accomplish what we want to accomplish. Capital and lack of capital is just a massive barrier that holds people back. If you can remove that one barrier, then people's ability to start, launch, and grow is, significantly greater probability of success. And that's really what I love seeing, is what happens when that barrier is removed and people have the ability to kind of grow the company and fulfill those dreams. Pretty cool.
Yeah, Naval Ravikant. I'm a big fan of him because he, his fourth part of leverage is media and content. And that's like, why we are so big on what we do. But the other part of it is money and financing, investing. It's just the ability to create, more leverage, more resources, I think is really what you're talking about allowing. I believe you even have a playbook or a blueprint that people can download and go and utilize. And we'll link that up at the end of the episode. But what are some of those steps? Or if you can kind of lay out the map, if you will, what are people needing to do to get this thing rolling?
I look at it two different ways. And I'm not saying this is the official way. It's just the way I've always found to explain to my tribe the easiest way. So I separate business credit from financing. And when I look at financing, I look at loans and credit lines. And then when I look at business credit, I typically am looking at, credit cards of some sort. So I like to separate those two. And it's easier to understand what you can get based on that separation. Now, business credit is something that any entrepreneur can get. Like I could literally launch a business today with 500 credit score, no collateral, no verification of cash flow, and I could build my business credit to $1 million in a year. 100%. If you follow the blueprint, if you follow the steps, same steps all the big companies follow, then you can absolutely be successful. And I think that is something that's essential. Then you've got financing, and we can talk about that in a minute. But with business credit, we've already talked about that first step. You got to set that business up where it's credible. And the easiest thing I say is that any line item on an application, when you're filling it out, like, does it make you look legitimate? Like, if it asks for your address, you're putting your home address. Like, is that really the light that you want to shine? Like, is that going to give a lender the highest view of your business? If they're asking for a phone number and you're using a home phone or a mobile phone, like, is that what you want people to see that you're using as your business phone? So a lot of that's just common sense. And we find there's 120 of these funding ready factors that lenders and credit issuers look at. And at the end of this, I think you'll give a link where somebody can go and get a funding ready score. Like, we'll take a look at your info 100% for free and then tell you, like, here's your funding ready score. Here's the stuff that's good. Here's the stuff that's wrong. Like, you've got to fix this stuff to be able to be funding ready. So that'll be 100% free. We don't usually do that on our website or anything, but I want to give that to your audience. So that'll help on the funding side. You got to get yourself up with your funding. Once you've done that, the next step is to start building initial business credit accounts. So you've got to go out and get approved for what are called starter vendors. And these vendors are unique because they'll approve you when you have no credit, and they report the credit they give you to a business credit reporting agency. They do these two very unique things. So these starter vendors will then give you credit to buy whatever, outdoor supplies, office supplies, swag, like whatever it is that you want to buy. And they'll approve you for credit. You use the credit, you buy stuff, you pay it back, and then those accounts report to a business credit reporting agencies. And once that happens, that's what gives you a business credit profile. That's what gives you a business credit score with Dun & Bradstreet, with Experian, with Equifax. And that's really the second stage, is we go from being where we're funding ready to then getting accounts that help us build initial business credit. And at the end of this, I think you'll give that link that we're talking about. And that link, again, gives 100% personalized recommendations of here's what's on your business credit report now. Here's the next accounts to add. Like, here's starter vendors that will help you get that initial report and score off the ground. Again, 100% free as part of that funding blueprint. So once they get to that point, then you have a business credit profile, you have a business credit score. Now you can start to get like revolving credit card accounts. And that usually comes like in this stage in two forms. One are called fuel cards, like fleet cards. And this doesn't work for me. I'm in the office. I don't need to fuel vehicles. But if you're on the road, transportation industry, trucking, if you're a plumber driving around everywhere, all those kind of people, well, then this helps you a lot because this helps you actually get the fuel and maintenance and repair vehicles. And then you also get retail credit here. And like, most retailers offer corporate credit without personal guarantees, without personal credit checks. I mean, we're talking about all the credit I'm talking about here does not require a credit check. It's regardless of credit quality. There's no revenue requirements. You can get it as a brand new business with no revenue. You don't need assets. You don't need I mean, this is money anybody can get. Anybody can get it if you have a business in the United States. So now we're getting credit at retailers. I'm talking about like the places you buy stuff now anywhere, right? Office Depot and Home Depot and Sam's Club, Costco, Lowe's, Amazon, Walmart, IKEA. I mean, even Nordstrom and Macy's has corporate credit without personal guarantees and credit checks. So like most of what you need to buy in your business, 90% of that stuff, these kind of credit cards can basically pay for you. They can handle for you. And you're getting $10,000 to $50,000 individual limits on these cards. Then when you get to a point where you have about 14 accounts or so on your business credit reports, then you get to that final stage of business credit building, which is auto financing. And again, now we're getting Visa cards, MasterCards, or what we call universal credit cards you can use anywhere. And that's the kind of the final stage of business credit building. So, normally you have 2-3 years to get there. Like our clients get there obviously way faster in about 6 months time, but it takes you about that long to get to the end of the process and you start getting credit from the beginning of the process on. And that kind of maps out the exact steps per se to be able to successfully build corporate credit and then use it to get the money you need to ultimately get your business to fund itself.
That's incredible. And we're definitely going to link that up in the show notes there. I want to ask you a little bit about technology and AI. I like to ask all of our guests about how it's sort of impacting the industry. But is there anything else that you think would be helpful in terms of the actual mechanics or the execution of these things that people will find helpful when they're going out,
I think we touched upon a lot of them. Set up your business where you're funding ready, build the business credit profile and score. I mean, that's as important to your business getting money as you are personally. If you're out trying to get money and struggling, well, you don't want to lend to a business that has no credit profile, no score, no history of paying their debt. So I think those are big things. And then really understanding the kind of funding you can get is very, very important as well. There's a lot of funding out there, as we talked about. So in the link that you'll give out in that funding blueprint, we actually incorporate, to your point with AI, we've created our own what's called Fund Smart AI. And it actually looks at like every single 100% of the legitimate funding programs that are out there today. I mean, there's nothing out there that we don't, unless there's something we don't know about. Everything out there that exists has plugged into the AI, over 1,000 plus lenders. And then this funding blueprint will even tell you, like, here's all the funding you can get right now. So that way you always have an idea of the money you can qualify for and the types of funding to go and get. So, because I think that's the other thing you should know. You just got to know the kind of funding you can actually get. But if you know those three things, how to set up your business when you're funding ready, how to start building that business credit profile and score to then from that point compound off of, and the kind of funding you can get, if you get those three things, then you're well on your way of getting all the money you need to grow. And that funding blueprint link will be able to give you all.
Yeah, fantastic. And it seems, the big thing for me that I'm taking away is like the path away from ignorance is like education and information. And that's sort of what you've been doing a fantastic job from. And I do remember the Periscope days. And so I think we've both been talking for for quite some amount of years.
Yeah.
Um, I've got, I guess, three questions for you. The first one is with AI and the tech, things that are changing so quickly, and even maybe I'll expand it to, whether it's geopolitical or economical or, things are changing so quickly. Is there a signal amidst the noise that you think is worth paying attention to? Or is there something that is happening amidst all these changes that you think is significant enough for people to, again, pay attention to?
Well, you got to pay attention to AI in general. I mean, AI is destroying a lot of sectors, jobs, and the way things are done, and it's creating new. And I think that if you're an entrepreneur today, you have to be looking at what AI, nobody knows. I mean, even those people that are creating it right now really do not even know what's going to happen in the next 3 to 5 years. But you have to be getting an idea of what is going to change and what it's going to change in the world. And you got to be on the right side of that. You got to be. Like if you're a copywriter, you're in trouble. Like there's just a lot of positions that are already being replaced by AI. So I think that's something you have to be aware of. As you're growing a business today, you have to really look at what AI is going to disrupt. And then you need to be on the right side of it and doing the stuff where AI is going to create a disruption in your favor, not a disruption against you. I mean, that would be my biggest piece of advice.
Yeah, I think people think that they had a timeline or, they think that they had time. I think that they've got to like cut that in half or maybe even a third with how much,
Yeah.
how quickly things are going.
Yeah.
If people want to find you, get more connected with you, I know you put out a lot of content, a lot of resources. Where's the best place for people to go?
We got a link at creditsuite.com/blueprint. And if they go to creditsuite.com/blueprint, then it just gives you this really cool, funny blueprint. It's less than a minute of your time, integrates with business credit reporting data, gives you your funding ready score, tells you exactly what to fix. You take the exact steps to fix the stuff, tells you exact business credit accounts you can get now to start building business credit. And then it tells you all the funding you can get right now. So it's like you just don't have to do any of the thinking. In less than a minute, you know it all. You can even log back in and go back at any time to check it out. So it's pretty cool. We're really happy with it. And a lot of people out there are using it. So check it out at creditsuite.com/blueprint.
Amazing. And you guys can always check the show notes for those links. And last question for you, Ty. In your opinion, what is the secret to scaling a business?
That's a good question. And I would basically sum it down to one word, which is resilience. This is what it comes down to. It's interesting because doing this a long time, I've been an entrepreneur for a long time. And, I still read books and talk about the stuff that created, the way that I think now, but you just have to move forward at all cost. And that's what I think it is. It's interesting in how I hear people that are not as much entrepreneurs or beginning entrepreneurs complain about so many things that are bad in their day. And I'm like, wow, to me, nothing is bad. Like it's all just a step forward, a learning experience towards where you're going. So if there's one trait you have, if there's one thing I think you have to do to successfully scale, you just have to be resilient. If you had that one thing and you're good at being resilient, then the rest of it you'll figure out along